Good morning, ladies and gents. Welcome to LAT's weekly market insights. It's Friday, the 10th of March. Alistair on the mic. Hope you all had a good trading week. Hopefully, you've managed to capitalize from some of the risk-off flows that we're seeing in the market, and that's what we're going to concentrate on today. We'll have a look at the S&P. We'll have a look at euro dollar. We'll have a look at oil. Very heavy correlations this week, and trading very much with the risk-on flows, which started really from Tuesday with Jerome Powell testifying in Congress. Now, the remarks that he had prepared came out with a very hawkish tilt, suggesting that faster tightening was going to be required, and that not only would there be an increase in the pace of rate hikes, but also the terminal rate expected to be higher than previously suspected. Now, that prompted a pretty significant sell-off in the risk markets, indices leading the way lower, oil moving also, and then the dollar catching a bid as well and moving euro dollar to the downside. Now, that was a fairly heavy headline, and then that has been reinforced and pushed lower again by the developments and the progressions towards the tail end of the week here on Thursday, with SVB, which is Silicon Valley Bank, showing a 60% sell-off in their share price. Now, that has filtered down into a ripple effect into the banking sector, which has seen significant market caps wiped off yesterday. Now, Silicon Valley Bank, they are one of the larger lending companies in Silicon Valley. Little known really about them if outside of the world of Silicon Valley in the tech space. However, this broad sort of space sell-off in the banking sector was prompted after SVB sold $21 billion worth of securities from their portfolio, and is also holding a $2.25 billion share sale in an attempt to try and shore up their finances and bring some stability. Now, all of this then prompted a big deposit outflows from companies, businesses within inside SVB. So it prompted this big liquidation in positions, rapid move lower in these risk markets, and all it's done is reinforce the negativity that was already being priced into the market from the more hawkish Fed, as markets try and anticipate and predict now the expectation of a 50 basis point hike instead of perhaps the 25 basis point hike that was previously suggested. Now, in line with that, again this week, we're also going to close the week out with non-farm payrolls, expected 205,000 jobs. This figure now carries even more weighting than ever as we try and secure and guarantee, do we get the 50 basis point hike? Do we get the 25? A high number here today, 210s, 220s, anything beyond that 205, increases, I think, here the chances of the 50 basis point hike at the next March meeting for the Fed. So it will be all eyes towards that. Now, all of these announcements, Jerome Powell's testimony, the collapse and the panic and the fear through the banking sector and SVB sort of triggering that in Silicon Valley, along with now the imminent threat of jobs day and the employment data, February payrolls here on Friday for non-farm payrolls, has all prompted some broad-based weakness and risk-off moves. Now, there have been some technical moves which we could certainly have played, and we're going to start with the S&P 500 here. We're just out here on a 4-hour chart, and I just wanted to recognize the transition that we've seen before, of course, the big capitulation and the sell-off that we've seen this week. Now, we went from a lovely 4-hour uptrend of higher highs and higher lows with a fairly accelerated trend line. Now, this trend line joining up the higher lows here, consecutive higher lows, so sort of fairly non-subjective, fairly objective trend line. Now, we started to see a failure to make a new high in this first move that didn't break the previous high, suggesting a slight slowdown. We then saw the break of the trend line. Now, that's not reversing the trend, but it does start to show more negativity and weakness in the market. Now, this initial sell-off, fairly aggressive, pretty strong, took us back down to this little buying zone, which we've seen here, which was trading down around the 40-50 handle. Clearly significant volume traded here, big impulsive move higher. The second sell-off, again, equally as aggressive, coming down, challenging that 40-50, buyers still holding firm. Before then, we saw the bigger move, which took out these lows and went down to challenge the previous higher low in the uptrend. So in and around this 40-50 handle, significant selling pressure, significant volume. And that's where we found ourselves trading. Back up on Thursday, we had a positive tail end to last week, Thursday, Friday. And then when we came into Monday, Tuesday, into Tuesday, we saw this consolidation, and we were trading back up at these previous lows put in place at that 40-50 handle. Now, as we came up to that, we went into a holding pattern ahead of Jerome Powell's testimony. But if I just move that head and shoulders out of the way, we can start to see significant selling pressure, shooting star formation trading just above that 4-hour level, and then a bearish engulfing following that shortly afterwards. Now that when we drop down to a lower time frame, come down into our hourly chart here, we can then see the formation of this head and shoulders. And this was how the market was poised ahead of Jerome Powell's testimony. Opportunities therefore to play the short of the head and shoulders with the injection of the fundamental, targeting back down to this previous high volume level. Okay, 39.67, not a hugely significant round number or anything like that, but clearly big volume, high interest around this level previously. The 44,000 handle there to be broken on the way. We did have a little bit of a pause, but any buying was soon stamped out, and this market continued moving lower. Yet ultimately the trigger, the entry for this head and shoulders coming below those previous 4-hour lows. So nice picture perfect, really technical scenario here, that transition from uptrend into this more bearish move. Strong resistance levels, good candlestick rejections, price patterns suggesting continuation down, and we've now seen that bigger move lower. So the first move, of course, Jerome Powell's testimony. We saw a little bit of brief buying into Thursday. Wednesday consolidated, bit of buying in Thursday. Before then, the banking story and SBV coming into effect, which then sent us down through the previous level, previous target level, down to the previous lows for that second target. We have then now gone on to our third support level, which is looking back at a pretty significant level back here. Again, it's the start, one of these higher lows where we've seen again that acceleration in buying pressure each time we come off that level. So certainly strong support for us ahead now of non-farm payrolls. Markets going to have their work out if they are to come down through this support today, following on from what has already been a very significant move. So the S&P shaped up nicely for short positions, and it was the same across the board really. If we come across to oil, very often seen in risk on, risk off as a pretty good proxy for risk, and we saw a pretty similar picture. So we see the uptrend, which was broken when I came down through these lows here. Significant sell-off. This was, of course, Jerome Powell that created that move lower, and that move coming from the previous highs, which were put in place back on the 13th of February. We can also see, looking further to back in time here, the 3rd of January, this big significant sell-off coming from here where we left this long upper shadow. So significant signs of excess and strong selling pressure up here. Once that trend had been broken with Powell, it was pretty much a straight shot down to this next support level. Now that support level sat at the 67 handle, and you can see the buying pressure similar to what we looked at S&P. The buying pressure increasing at this level. So no surprise that there was buyers step in here. That buyers got the opportunity to have a run at this level with this formation of this double bottom. And the MPO of that double bottom played out. Okay, the MPO took us perfectly back up to these highs, 77.65, some 760 region, which unfolded again just ahead of then the the move lower in the US session yesterday with SVB, and as we mentioned, the Silicon Valley Bank developments. Now that then slowdown in buying, and this reduction made it fairly clear cut for us to come through this support level. Most buyers now exhausted and have had enough of this level moving through, and it's hard to see too much getting in the way now until we make a run down to this 74 handle in around these previous lows put in place, where once again you can see there has been an increase in acceleration in buying pressure. So oil looks set really for probably a further continuation to the downside. Does that happen today? It's going to be largely dependent on non-farm payrolls. Personally, I suspect we may range and then find our way down to this level through the course of next week. But beautiful moves lower here. Oil again, risk off tones, S&P lower, oil shifting lower. And then last but not least, of course, the dollar. Significant as always to pay attention to what is happening here. We've got euro dollar, which again, nice trending market, higher highs, higher lows, came into previous resistance. You can see this was the highs in place from February, Sunday, so Monday, 20th of February. Strong sell-off. We can see that big aggressive wick rejection, big move lower, breaking down through previous lows. So clear high level, high interest around that 107 handle. And as we ran into that level, we created this double top formation, saw a break of the neckline with the retest, so pretty clear cut. And again, once that market then took out the higher low in this short-term uptrend, very little in the way of support to stop this until we run down into these lows down at 105.40 region, 105.37, where this previous double bottom had formed. If we come out to sort of a higher time frame here to our 4-hour charts, we can just see this level previously being respected. It's pretty significant reaction of price the last time we were down here on the 26th of February. Now, since then, of course, euro dollar just holding fairly flat. Without a doubt, waiting on non-farm payrolls today. Generally expecting this probably to stay somewhat within this range of these previous lows and the lows, the support down at the bottom here. But technical opportunities throughout the week, okay, whether we've been looking at oil, S&P, euro dollar, all very heavily correlated this week, providing great technical setups, along with, of course, the catalyst of the fundamental. Now, that's where this can sometimes get difficult. It's trying to pair a fundamental move, a fundamental driver, in this instance, a testimony from Jerome Powell, a meltdown in sort of the banking sector and panic spreading through SVB, but it's then trying to remove the emotion, remain disciplined and control, and that's where the technical analysis comes in. Technical analysis then comes in order to provide you with the framework and the structure to execute a trade, capitalize, generate some profits without the emotion and the discipline, lack of discipline taking over. Okay, so as we look towards the rest of the week now, it's going to be non-farm payrolls. As we said, a figure beyond the 205, pushing towards the 210s, 20s or higher, pushes and reinforces the chance of a 50 basis point hike for the Fed March rate decision. It's going to need to be a significant number today to see continuation of these moves, I would suggest. Strong sell-offs already. Do we see more panic selling on the Friday, or actually do we go into a bit of a holding pattern and take a breather after what has been a phenomenal week for nearly all traders, whether you trade indexes, commodities, FX, bond markets, significant moves across the board. Perhaps a time to take a step back, consolidate, enjoy the profits from the week, and regather once that data has been released. That will be 1:30 today, so keep your eyes peeled for that. All right, so that is all from us here at LAT this week. I hope you managed to capitalize on some of these moves. Hopefully this webinar has shown you ways and some of the technical setups that could have enabled you to access some of these opportunities. Please do enjoy your weekends. Those of you that have snow, enjoy the snow. And we will be back with you same time next week for another weekly market insights. Bye for now, everyone.